Hey, you're welcome to the Trends Bite with Jojo Teaser. And now,
welcome to the deep dive.
Oh, yeah.
Today we're tackling the Nigeria Tax Bill 2024.
Okay.
All 203 pages of it. Don't worry. We've sifted through the legal jargon to bring you the bits that could actually affect you.
Okay, cool.
You know what I mean?
Yeah.
Like, we went through it and found the most important parts for you.
Yeah, tax bills might not be beach reading, but they impact almost every financial decision we make.
It's true.
Understanding the key changes is like having a secret weapon in your pocket.
I like that. A secret weapon. So, let's unlock this vault, shall we?
Yeah, let's do it.
The bill kicks off by defining basics, like income and benefits. Seems simple, but there are some curveballs.
Well, what's fascinating is how the bill grapples with the digital age.
Okay.
Digital assets are explicitly included as income. So those crypto gains, they're on the radar.
Hold on.
Yeah.
Does that mean if I buy a pizza with Bitcoin, that's technically taxable income too?
Technically, yes. That pizza purchase could be seen as a disposal of a digital asset.
Really?
And potentially triggering a capital gains tax event.
Wow. So even ordering takeout is getting complicated.
Yeah.
And it's not just crypto. The bill also targets something called regulated securities lending transactions.
Right.
What is that?
Any payments borrowers make to lenders for these transactions are considered interest income. And you know what that means? Taxable. It shows how tax laws are constantly evolving to keep pace with new financial tools.
It's like playing a game where the rules keep changing. Speaking of changing, the bill's definition of benefits for employees goes beyond the usual salary.
Think about it.
Okay.
If your employer provides you with housing, that could be considered a taxable benefit too.
Really?
The bill gets specific, saying it's either the market value of the house when your employer acquired it or the annual rent they pay, whichever applies.
But wouldn't that discourage companies?
Yeah, that's a good question.
From providing perks like housing?
Not necessarily.
Okay.
There are exemptions.
For what?
For things like meals in the company canteen, uniforms, tools, relocation expenses, even costs for your family or dependents.
Okay, so those perks are still on the table.
Yeah.
But this definitely makes me rethink what I consider a good deal from an employer. What about partnerships? Does the bill impact those?
It does.
Okay.
And it offers much needed clarity.
Like what?
It provides guidelines for determining each partner's share of profits or losses.
Okay.
Even without a formal agreement.
Wow.
Plus, there's a new requirement to register partnership details with the tax authorities.
Really?
Even if you just change a minor detail.
So transparency is key here.
Exactly. And here's where it gets really interesting.
Okay.
A partner's income from a Nigerian partnership is allocated to specific territories within Nigeria.
Really?
According to the 13th schedule.
Wait, so where you live in Nigeria affects how much tax you pay on partnership income? That seems a bit random.
It does highlight the geographical nuances of tax laws.
Yeah.
Why certain territories have different tax burdens is a deep dive for another time.
Okay.
But now let's shift gears to the international arena.
Okay.
The bill dives into the concept of permanent establishment, a critical factor for businesses operating across borders.
Okay, but in plain English, what does permanent establishment actually mean?
Imagine a U.S. tech company setting up a software development office in Lagos.
Okay.
That office would be their fixed place of business in Nigeria.
Okay.
The bill sees that as a permanent establishment and subjects the revenue generated from that office to Nigerian taxes.
So it's not just about visiting for a conference.
Yeah,
It's about having a solid footprint in Nigeria.
Precisely.
Okay.
The bill outlines specific conditions that trigger this permanent establishment status, like having that fixed office, or undertaking a construction project for more than 183 days.
And companies with this status can still deduct certain expenses, right?
Absolutely. The bill outlines deductible expenses, but there are exceptions. For instance, you can't deduct payments for royalties or fees for using patents unless they're for actual expense reimbursement.
So they're trying to prevent companies from artificially inflating expenses to dodge taxes?
Exactly. It's about making sure profits are taxed where the real economic activity occurs.
Makes sense.
Now, let's bring it back home to deductions and exemptions for individuals and businesses operating within Nigeria.
Ah, yes. Deductions, every taxpayer's favorite topic. What does this bill have in store for us?
This bill tries to make things clear. It states any expense you incur to generate your taxable profit is deductible. That's pretty broad. It even includes expenses from up to 6 years before your business started.
Whoa, that's a long time. So I should have been meticulously tracking those late night coffee runs back in college.
Yeah.
Just kidding. Any other noteworthy deductions?
Dividends from real estate investment companies listed on the Securities and Exchange Commission are also deductible for shareholders.
Interesting.
But remember, there's a flip side, things you can't deduct.
Yeah, okay.
Taxes on your income, depreciation of assets, payments to unapproved retirement funds, and expenses for earning tax-exempt income are all no-goes.
So it's like a balancing act. They giveth and they taketh away.
Exactly.
But what about losses? Can those be used to offset future profits?
Yes, but there's a catch. You can only offset those losses against profits from the same trade or business where the loss happened.
Oh, I see.
So no shuffling losses around to minimize your overall tax burden.
It's like a game of chess. You have to think strategically about your moves.
Exactly. And that's why understanding these nuances is so important. But before we get lost in a sea of numbers, let's zoom in on how the bill treats specific industries.
Okay, sounds good.
First up, insurance.
Okay, what's the deal with insurance companies? Do they get any special treatment?
The bill draws a clear line between life and non-life insurance businesses. They must be assessed separately, keeping their funds and accounting totally distinct.
So no mixing and matching allowed. It seems like they're really emphasizing transparency and accountability.
Absolutely. And speaking of industries with a bit of a reputation, let's talk about lottery and gaming.
Oh, fun.
Which gets its own section in this bill.
Okay, now we're talking. What's the scoop on the gambling world?
The bill defines gaming and lottery very broadly, covering everything from sports betting to good old-fashioned bingo. Any income from these activities is subject to taxation.
So even winnings?
Yes.
No free pass for lucky winners?
No.
So whether you're hitting the jackpot or just playing for fun, the tax man wants his cut. Besides insurance and gambling, what other industries get special attention in this bill?
Well, there are provisions for collective investment schemes outlining how their profits are determined for tax purposes. And of course, we can't forget the oil and gas sector.
Yes, of course.
A major player in the Nigerian economy. This bill outlines capital allowances for both upstream and downstream petroleum operations.
Wow.
Even addressing gas transfers within the industry.
So they're casting a wide net, ensuring the entire oil and gas value chain is accounted for.
Precisely. It's a complex industry. And the bill reflects that complexity.
So are there any provisions that affect me specifically?
Well, this raises an important question for our listeners. Are there industry-specific provisions in this bill that could affect your work or investments?
I should probably check.
It's worth checking.
It's like a choose-your-own-adventure book. Find the chapter that applies to you. Now, are you ready to take on a behemoth?
Okay.
Let's dive into the world of value-added tax.
All right. VAT.
VAT is a cornerstone of Nigeria's tax system. So understanding its role in this bill is crucial.
Okay, but where do we even begin with something as complex as VAT?
First, we need to grasp what's considered a taxable supply. And when it occurs in Nigeria, the bill sets clear guidelines for both goods and services.
So for both?
For goods, it's all about when they're removed or made available.
For services, it's about when they commence.
So timing is everything. But once we've pinned down that time of supply, how is the actual VAT calculated?
The bill sets different VAT rates depending on the type of goods or services. Crude oil, natural gas, and LNG are taxed at 7.5%. The same rate applies to imported goods and services.
So they're encouraging local production by keeping the VAT on those items relatively low.
Okay.
Makes sense. But what about everything else?
That's where things get interesting.
Oh.
Everything else faces a tiered VAT rate that goes up over time.
Oh, no.
From January 1st, 2025 to December 31st, 2025. It's 10%.
Okay.
Then it jumps to 12.5%.
Wow.
From January 1st, 2026 to December 31st, 2029.
Okay.
Finally, it settles at 15% from January 1st, 2030 onward.
Whoa. So the VAT on most things is going up steadily over the next few years.
That's right.
That's important for businesses trying to plan ahead.
Yeah, definitely.
But I'm sure there must be some exemptions, right? Not everything can be subject to VAT.
You're right, there are.
Okay, good.
The bill grants the minister the power to suspend or delay VAT collection on specific items if it's in the public interest.
So like what?
For example, they might temporarily lower the VAT on certain foods to combat rising prices.
So there's some flexibility built into the system.
Yeah.
That's good to know. But before we get too comfortable, I have a nagging question.
Yeah.
How will this tiered VAT increase actually affect people's lives?
Yeah.
Won't it lead to higher prices on everyday goods and services?
That's a valid concern.
Yeah.
It's likely that businesses will pass on at least some of that increased VAT burden to consumers, which could lead to higher prices.
So this seemingly small detail in the bill could have a ripple effect throughout the entire economy.
Exactly. And that's why it's so crucial to understand not just the rules themselves, but also their potential consequences.
Right.
But enough doom and gloom about potential price hikes.
Yeah.
The bill also focuses on encouraging growth in specific industries through economic development incentives.
Okay, sign me up.
Yeah.
What kind of incentives are we talking about here?
The Nigerian Investment Promotion Commission, or NIPC, can issue economic development incentive certificates.
Wow, that's a mouthful.
Yeah.
So NIPC certificates to companies that meet specific criteria.
Yes.
But what are those criteria?
Yeah.
What's the secret formula?
Well, it's not a one-size-fits-all formula.
Yeah.
The criteria vary by industry and project. But the NIPC generally considers the scale of capital investment job creation potential. And the company's contribution to Nigeria's overall economic goals.
So it's not just about handing out tax breaks like candy.
No.
They want to ensure these incentives actually fuel meaningful progress.
Precisely.
Okay.
The bill outlines a rigorous process for evaluating applications and making sure everyone plays by the rules.
So they really vet them.
Yeah.
No free rides.
No.
Speaking of perks, you mentioned gas pipeline investors getting a special tax holiday earlier. Are there other sectors enjoying similar VIP treatment?
You bet.
Really?
The 11th schedule lists various sectors and their exclusive incentives. It's a buffet of tax breaks.
Ooh, a schedule dedicated to tax breaks. Count me in.
Yeah.
What are some of the highlights on this exclusive menu?
It covers a spectrum of sectors.
Like what?
From manufacturing and agriculture to mining and tourism. For instance, companies producing pharmaceuticals, fertilizers, and renewable energy equipment could qualify for significant tax breaks.
Wow, that's quite the eclectic mix. It seems like they're strategically encouraging investment in sectors that are crucial for Nigeria's future.
Absolutely. The schedule acts as a roadmap for potential investors, outlining sector-specific requirements, the length of incentives, and the investment needed to qualify.
Wow. So it's all right there.
Yeah.
It's like a treasure map leading to tax saving.
Exactly.
This is making me think, are any sectors on this schedule aligned with your interests or areas of expertise?
Good question.
Maybe there's a hidden treasure waiting for you.
It's certainly worth a look.
Yeah.
Beyond the 11th schedule, the bill also caters to specific industries like plantation farming.
Plantation farming, what makes it so special?
The bill acknowledges the unique nature of this industry where it takes years for a plantation to bear fruit, so to speak. They've created special rules to attract investment in this long-term game.
Okay, I'm intrigued.
Yeah.
What are these special rules?
Yeah.
Do they get a magic bean to grow a money tree overnight?
Well, not quite a money tree.
Okay.
But the bill considers a plantation company's trade to commence.
Okay.
Only when it hits commercial production.
Oh, I see.
This means no taxes until they're actually generating revenue.
Wow.
It's like a grace period.
Oh, wow.
To let their investment mature.
That's a huge advantage. It takes a lot of pressure off in those initial years.
For sure.
Are there any other perks for our green-thumbed entrepreneurs?
Yes. Maintenance expenses for planted areas are classified as qualifying plantation expenditure, making them deductible.
So they can deduct that?
Yeah.
Okay.
It's another way the bill incentivizes long-term agricultural projects.
It's like they're saying, plant those seeds, nurture them, and we'll help you weather the storm until harvest time. It's a refreshing approach.
This focus on economic development is woven throughout the bill.
Yeah.
Showcasing a commitment to nurturing growth across various sectors.
Now, let's turn our attention to a topic that always sparks debate.
Okay.
Tax exemptions.
Oh, yeah.
Feels like everyone has an opinion on who should and shouldn't be exempt.
Yes, the get-out-of-jail-free card of the tax world.
Yeah.
But in all seriousness, tax exemptions can be powerful tools for achieving specific policy goals.
Right.
And this bill wields them strategically.
Okay, let's recap those key exemptions we've discussed so far.
Right.
What are some of the highlights?
We talked about exempting electronic money transfers below N10,000 from stamp duty.
Yeah.
A big win for everyday transactions.
Right.
And the VAT exemptions for medical services, education, pharmaceuticals, and basic food items are designed to ease the burden on essential needs.
Right. Those exemptions are all about making life a little easier and more affordable for everyone.
Yeah.
But it seems like the bill goes even further.
It does.
Offering VAT exemptions for various items deemed beneficial to the public.
Absolutely. The 12th schedule is the key player here.
Okay.
It's a dynamic list of items subject to VAT suspension or delay.
So it changes. It's not set in stone.
That's right.
The government can tweak it as needed.
Yeah.
Wow. Okay.
The list encompasses a wide range of items, including petroleum products, renewable energy equipment, and certain agricultural inputs.
That's a pretty diverse mix. It seems they're strategically using these VAT exemptions to manage inflation, promote specific industries, and support key sectors of the economy.
Exactly.
Yeah.
They're playing a delicate balancing act.
Yeah.
Carefully calibrating exemptions to achieve their economic and social objectives.
This reminds us that it's not just about what's explicitly stated in the bill. We need to understand the underlying intentions and the potential ripple effects of these exemptions.
I completely agree. Now, shifting gears again, the bill incorporates several provisions to ensure fairness and transparency in the tax system.
Okay, good.
Which is always a good thing in my book.
Transparency and fairness. Those are definitely buzzwords everyone wants to hear when it comes to taxes. What are some of the standout provisions in this area?
One key provision is the emphasis on arm's length transactions between related parties.
Oh, yeah, we talked about that briefly earlier.
Which we touched on briefly earlier.
Okay, so arm's length transactions. What does that mean in plain English?
Imagine a parent company selling goods to its subsidiary.
Okay.
They might be tempted to set an artificially low price to shift profits to the subsidiary, which might be located in a country with lower taxes. The arm's length principle ensures they set a price that's consistent with what unrelated parties would agree on.
Oh, I see.
No funny business.
So it's like a referee making sure everyone is playing fair and not trying to bend the rules.
Exactly.
Does the bill address any other potential loopholes or shady practices?
The bill also tackles the issue of double taxation, both within Nigeria and in international transactions. Nobody wants to pay taxes twice on the same income.
Double taxation sounds like a taxpayer's worst nightmare.
Yeah.
How does the bill protect against that?
It incorporates various mechanisms, including tax credits and exemptions to alleviate that burden. It aims to ensure that income is taxed only once, regardless of where it's earned. This is especially crucial in our increasingly globalized economy, where individuals and businesses operate across borders.
But I'm curious. You mentioned earlier that the service has the power to create regulations. How does that work in practice? Do they have free rein?
That's a great question.
To interpret and implement the rules however they see fit?
While the bill grants them broad authority to create regulations, there are checks and balances in place.
Like what?
Any regulations they draft must be approved by the minister, ensuring a layer of oversight.
So it's a collaborative effort.
Precisely.
Right.
It strikes a balance between allowing flexibility to adapt to changing circumstances and preventing overreach.
Speaking of adapting to change, one of the most striking aspects of this bill is its acknowledgement of the digital economy.
Right.
It's refreshing to see them addressing the elephant in the room.
Yes. We already discussed how they define digital assets as taxable income, showing they're taking cryptocurrencies and other digital assets seriously.
But it seems like they're going beyond just crypto.
Right. Absolutely. They've included provisions
for what?
To tackle the unique challenges of taxing online businesses.
Okay.
And those tricky cross-border digital transactions.
It's like they're trying to predict the future of commerce and ensure the tax system can keep up.
Exactly. It's a dynamic landscape.
Yeah.
And this forward-thinking approach is commendable.
This makes me wonder what other aspects of the digital economy might need to be addressed in future tax laws.
Yeah.
It's a constantly evolving world out there.
That's a fantastic question.
Yeah.
One that deserves its own deep dive. But for now, let's turn our attention to a less glamorous, but equally important aspect.
Okay.
Dispute resolution.
Dispute resolution. That sounds a bit ominous. Does it involve lawyers, courtrooms, and mountains of paperwork?
Well, tax disputes are an inevitable part of life.
That's true.
No matter how clearly the rules are laid out. Disagreements between taxpayers and the tax authorities will always arise.
That's true. So how does this bill propose to handle these inevitable disagreements?
Okay.
Do we need to gear up for a legal battle royale?
Not necessarily.
Okay.
The bill outlines a multi-tiered process that starts with an internal review within the service. If the taxpayer is still unhappy, they can appeal to the Tax Appeal Tribunal.
So there's a structured path for resolving disagreements without resorting to all-out legal warfare.
Exactly. The bill sets out clear timelines, procedures, and grounds for appeal, providing a framework for fair and transparent dispute resolution.
That's reassuring. It's good to know there's a system in place to protect taxpayers' rights and ensure everyone gets a fair hearing.
Exactly.
But before we get too bogged down in the legal intricacies, let's zoom out again and consider the bigger picture. This bill is incredibly detailed.
Yeah, it is.
Covering everything from income and deductions to specific industries and dispute resolution.
It's a lot.
It's a lot to digest.
It's true. This legislation is far-reaching with the potential to impact everyone, from individuals to multinational corporations.
But don't feel overwhelmed.
Yeah, don't worry.
We're here to break it down into manageable bites.
That's right.
Exactly. That's the beauty of the deep dive.
Right.
We're exploring this complex bill together, uncovering the hidden gems and potential pitfalls along the way.
Yeah. Before we wrap up this part of our deep dive, let's highlight a few general provisions that deserve special attention.
Okay, I'm all ears.
These are the foundational elements that underpin the entire tax system.
Okay, what are the bedrock principles we need to understand?
First and foremost, the bill stresses the importance of meticulous record keeping.
Gotcha.
Taxpayers are required to maintain accurate records of their income and expenses.
Yeah. Okay.
And these records can be audited.
So no more like shoebox accounting or scribbling numbers on napkins. The days of haphazard record keeping are over.
Precisely. And it's not just about those old school paper trails. The bill acknowledges the importance of electronic records and digital documentation in our increasingly digital world.
It's like they're saying, embrace technology, but make sure your digital footprints are squeaky clean.
Exactly.
Yeah.
Now, along with the need for accurate records comes the Services Authority to conduct audits and investigations.
Ah, yes, the dreaded audit.
Right?
It's every taxpayer's worst nightmare.
Yeah.
But I guess it's a necessary evil to ensure everyone is playing by the rules.
It's all about accountability.
Okay.
The bill outlines the procedures they must follow when conducting audits, the rights taxpayers have during the process, and the penalties for noncompliance.
So it's not a free-for-all. There are safeguards in place to protect taxpayers' rights and ensure that audits are conducted fairly and transparently. That's reassuring.
Yeah.
But what about those who don't play by the rules?
Okay.
What happens if you miss a deadline,
right,
underpay your taxes, or simply ignore an audit request?
That's where penalties and interest come into play.
Uh-oh.
The bill outlines a range of penalties for various offenses, ensuring there are consequences for those who try to game the system.
So ignorance is not bliss when it comes to taxes.
Nah.
It's crucial to understand the rules and comply or face the consequences.
Exactly.
The bill also specifies the interest rates that apply to unpaid taxes. So the longer you procrastinate, the more it will cost you in the long run.
That's right.
It's like a ticking time bomb.
So the message is clear.
Okay.
Pay your taxes on time, keep accurate records, and be prepared for potential audits.
Gotcha. But before we wrap up this part of our deep dive, I want to hear your thoughts.
Okay.
What aspects of this bill have stood out to you so far? What has surprised you? What has made you think differently about the Nigerian tax system?
It's been fascinating to see how this bill attempts to balance the need for revenue generation with a focus on economic development and social welfare. The emphasis on transparency, fairness, and adaptability is truly commendable.
I agree. It's clear that a lot of thought and effort went into crafting this legislation.
Yeah.
But as with any complex piece of legislation, the true test will be in the implementation. How effectively will these provisions be enforced? What unforeseen challenges might arise?
Those are excellent questions.
Yeah.
And we'll delve into the potential implications and challenges in the final part of our deep dive.
Okay.
Stay tuned for more insights.
Sounds good.
As we explore the potential impact of the Nigeria Tax Bill 2024.
It's like we're standing at a crossroads with this bill representing a potential turning point for the Nigerian economy.
Which path will we choose? Only time will tell.
Yeah, that's true.
But one thing is certain.
Yeah.
We'll be here to guide you through the twists and turns along the way.
Okay, it's guided.
Join us for the thrilling conclusion of our deep dive into the Nigeria Tax Bill 2024.
Welcome back to the deep dive. We've journeyed through the labyrinthine corridors of the Nigeria Tax Bill 2024, from defining income in the digital age to dissecting VAT and exploring industry-specific incentives.
We've unearthed a wealth of information.
Yeah, we have.
But now it's time to step back and consider the broader implications.
Okay.
What does this bill signify for Nigeria's future? And what ripple effects might we see across the economic landscape?
It's like we've assembled a giant jigsaw puzzle, and now we're finally seeing the full picture. What message does this picture convey about Nigeria's economic trajectory?
This bill paints a picture of a nation committed to modernizing its tax system, embracing global standards, and fostering a climate of transparency and accountability.
So it's not just about generating revenue. It's bigger than that.
It's about more than just collecting revenue. It's about building a solid foundation for sustainable economic growth.
So it's a long-term strategy, not a quick fix.
Exactly. Take the inclusion of digital assets as taxable income, for instance.
It signals that Nigeria recognizes the burgeoning digital economy and its potential to transform traditional financial systems. They're not shying away from the complexities of this new frontier, but actively seeking ways to integrate it into the existing tax framework.
It's like they're saying, we're open for business in the digital age.
Precisely. And the provisions for dispute resolution, the focus on arm's length transactions between related parties, all these elements point towards a system designed to promote fairness, predictability, and investor confidence.
Exactly.
So it's not just about squeezing every last naira out of taxpayers, but about creating a level playing field that encourages both domestic and foreign investment.
Exactly. This bill lays the groundwork for a more stable and transparent investment environment. A key ingredient for attracting foreign capital and nurturing homegrown entrepreneurship.
But let's be realistic. No bill is perfect. Are there potential challenges or unintended consequences?
That's a great question.
Lurking beneath the surface that we should be wary of?
You raise a valid point. One potential hurdle is the implementation itself.
Okay.
Rolling out such a sweeping overhaul requires significant resources, coordination across various government agencies, and a clear communication strategy to ensure taxpayers understand the changes.
It's like launching a spaceship. Yeah. You need all systems go and a well-trained crew to navigate the complexities of space.
Precisely.
Right.
And even with the best intentions, unforeseen loopholes or unintended consequences can emerge once the bill is put into practice.
Yeah, that's true.
It's crucial to remain vigilant, monitor its impact, and be prepared to make adjustments as needed.
So flexibility and adaptability are key.
Yeah.
But I'm also curious about the potential social impact.
Right.
Will the benefits of economic growth be evenly distributed? Yeah. Or will certain groups bear a disproportionate burden under the new system?
That's a crucial question.
Yeah.
It's essential to assess how these changes might affect different segments of society, particularly vulnerable populations.
Will the exemptions for essential goods and services be sufficient to protect those struggling to make ends meet?
Yeah.
Will the increased focus on digital assets exacerbate existing inequalities in access to technology and financial resources?
Those are all important questions.
These are all crucial considerations.
Yeah.
This deep dive has opened our eyes to the multifaceted nature of this bill and its potential to reshape Nigeria's economic landscape.
And that's the beauty of exploration, isn't it?
Yeah, it
sparks new questions, challenges our assumptions, and pushes us to think critically about the world around us.
Absolutely. So as we conclude our deep dive into the Nigeria Tax Bill 2024, what are the key takeaways our listeners should carry with them?
First and foremost, recognize this bill as a significant stride towards modernizing Nigeria's tax system. It's a bold, ambitious, and forward-looking piece of legislation with the potential to create a more equitable, efficient, and globally competitive economy.
Second, understanding this bill is essential for anyone doing business in or with Nigeria.
Right.
It's not just about memorizing the rules, but grasping the underlying policy objectives and anticipating how these changes might impact your industry and financial decisions.
And finally, remember that this is just the beginning of the conversation. As the bill is implemented, refined, and adapted to the ever-changing economic landscape.
Right.
New questions and challenges will inevitably arise.
So stay informed, stay engaged, and keep those critical thinking skills sharp.
And most importantly, share your own insights and perspectives. What are your thoughts on this bill? What opportunities or challenges do you foresee?
Right.
Your voice matters in shaping the future of Nigeria's economic landscape.
We encourage you to join the conversation. Share your thoughts on social media or drop us a line.
We're all on this journey together.
Until next time on the deep dive, keep exploring, keep questioning, and keep learning.
Yeah, absolutely.
Welcome back to the deep dive. We've journeyed through the labyrinthine corridors of the Nigeria Tax Bill 2024, from defining income in the digital age to dissecting VAT and exploring industry-specific incentives. We've unearthed a wealth of information.
I have.
But now it's time to step back and consider the broader implications. What does this bill signify for Nigeria's future? And what ripple effects might we see across the economic landscape?
It's like we've assembled this giant jigsaw puzzle, and now we're finally seeing the full picture.
It is, Or what message does this picture convey about Nigeria's economic trajectory?
Well, this bill paints a picture of the nation committed to modernizing its tax system.
Embracing global standards and fostering a climate of transparency and accountability. You know, it's about more than just collecting revenue. It's about building a solid foundation for sustainable economic growth.
So it's like a long-term strategy.
Not a quick fix.
Exactly. Take the inclusion of digital assets as taxable income, for instance. It signals that Nigeria recognizes the burgeoning digital economy and its potential to transform traditional financial systems. They're not shying away from the complexities of this new frontier, but actively seeking ways to integrate it into the existing tax framework.
Like they're embracing the future.
Yeah.
It's like they're saying we're open for business in the digital age.
Precisely.
And the provisions for dispute resolution, the focus on arm's length transactions between related parties, like all these elements point towards a system designed to promote fairness, predictability, and investor confidence. Yeah. So it's not just about squeezing every last naira out of taxpayers, but about creating a level playing field that encourages both domestic and foreign investment.
Exactly. This bill lays the groundwork for a more stable and transparent investment environment.
Right.
The key ingredient for attracting foreign capital and nurturing homegrown entrepreneurship.
But let's be realistic.
Okay.
No bill is perfect, right?
Yeah.
Are there potential challenges or unintended consequences lurking beneath the surface that we should be wary of? You know what I mean?
You raise a valid point.
Yeah.
One potential hurdle is the implementation itself.
Yeah.
Rolling out such a sweeping overhaul requires significant resources, coordination across various government agencies, and a clear communication strategy to ensure taxpayers understand the changes.
That's like launching a spaceship. You need all systems go and a well-trained crew to navigate the complexities of space.
Precisely. And even with the best intentions, unforeseen loopholes or unintended consequences can emerge once the bill is put into practice.
Right, because we've never done it before.
Yeah.
It's crucial to remain vigilant, monitor its impact, and be prepared to make adjustments as needed.
Yeah, exactly.
So flexibility and adaptability are key.
Yeah, for sure.
But I'm also curious about the potential social impact.
Right.
Will the benefits of economic growth be evenly distributed, or will certain groups bear a disproportionate burden under the new system?
That's a crucial question.
Yeah.
It's essential to assess how these changes might affect different segments of society, particularly vulnerable populations.
Will the exemptions for essential goods and services be sufficient to protect those struggling to make ends meet? Will the increased focus on digital assets exacerbate existing inequalities in access to technology and financial resources?
It's a really good question.
These are all crucial considerations.
Yeah.
This deep dive has opened our eyes to the multifaceted nature of this bill and its potential to reshape Nigeria's economic landscape.
And that's the beauty of exploration, isn't it?
It is.
It sparks new questions, challenges our assumptions, and pushes us to think critically about the world around us.
Absolutely.
Yeah.
So as we conclude our deep dive into the Nigeria Tax Bill 2024, what are the key takeaways our listeners should carry with them?
First and foremost, recognize this bill as a significant stride toward modernizing Nigeria's tax system.
Okay.
It's a bold, ambitious, and forward-looking piece of legislation with the potential to create a more equitable, efficient, and globally competitive economy.
Okay.
Second, understanding this bill is essential for anyone doing business in or with Nigeria.
It is.
It's not just about memorizing the rules, but grasping the underlying policy objectives and anticipating how these changes might impact your industry and financial decisions.
And finally, remember that this is just the beginning of the conversation.
It is.
As the bill is implemented, refined, and adapted to the ever-changing economic landscape, new questions and challenges will inevitably arise.
Yeah, for sure.
So stay informed, stay engaged, and keep those critical thinking skills sharp.
Yeah. Keep learning, and most importantly, share your own insights and perspectives.
What do you think?
What are your thoughts on this bill?
Yeah.
What opportunities or challenges do you foresee? Your voice matters in shaping the future of Nigeria's economic landscape.
We encourage you to join the conversation, share your thoughts on social media, or drop us a line. We're all on this journey together.
We are.
Until next time on The Deep Dive.
Okay.
Keep exploring, keep questioning, and keep learning.
Yes, absolutely.